Right now, while you're watching this, a quiet panic is spreading through the boardrooms of every major tech company on the planet. It has nothing to do with code, algorithms, or data centers. It's about a metal, a shiny, boring metal that nobody talks about at dinner parties. And the people who figured this out 6 months ago, they're already rich. You're about to find out why you're late, but not too late. Let me be very clear with you. I'm not here to sell you silver bars or some crypto scheme with a metal logo. I'm here because I spent 2 decades analyzing commodity flows, supply chain breakdowns, and the gap between what corporations say in public and what they were scrambling to buy in private. And what I'm seeing right now is not speculation. It's mathematics. It's physics. And it's happening whether you pay attention or not. The AI boom everyone's celebrating, it's built on a foundation that's crumbling. And that foundation is made of silver. Not metaphorically, literally. Every chip, every server, every neural network training facility, every data center powering ChatGPT or Midjourney, or the autopilot in a Tesla, they all need silver to function, and we're running out. Here's what they're not telling you. Silver is the most conductive metal on Earth. Nothing else comes close, not copper, not gold, not aluminum. When you need electricity to move fast, precisely, and reliably across a microscopic circuit, you use silver. There is no substitute. None. Engineers have tried for decades. They failed. So every smartphone, every EV charging port, every solar panel, and especially every AI accelerator chip has silver inside it. Not a lot. A few grams per device. But when you're making 1 billion devices a year, those grams add up. Fast. Now here's the problem. We've been mining silver for over 5,000 years. The easy stuff is gone. Most silver today doesn't even come from silver mines. It comes as a byproduct of copper, lead, and zinc mining. Which means, if those industries slow down, silver production collapses. And right now, global mining output is plateauing. Some analysts say it already peaked. Meanwhile, demand is exploding. AI data centers alone are projected to use more silver in the next 5 years than the entire smartphone industry used in the last decade. Add in solar energy, electric vehicles, and 5G infrastructure, and you've got a supply-demand gap that's not just growing, it's exponential. And here's the kicker. Most people still think of silver as jewelry, as old coins in their grandparents' drawer. They have no idea it's the bloodstream of the digital economy. The corporations know, the governments know, but they're not talking about it because the moment the public catches on, the price will move so fast it'll make your head spin. And that's already starting. So who are these geeks turning into millionaires overnight? They're not Wall Street traders. They're software engineers, data scientists, hardware designers, people who actually build the AI systems everyone's obsessed with. And about 18 months ago, a few of them started asking a very simple question. Where does the silver come from? They looked at the supply chain. They looked at the production forecasts. They looked at the demand models, and they realized something terrifying. The AI industry is about to hit a physical bottleneck. Not a software problem, not a talent problem, a materials problem. So they started buying silver quietly, not in flashy ways. They bought physical bullion. They bought shares in mining companies. They bought futures contracts. And they told their friends, engineers talk to engineers, they share data, they run simulations, and once the math checked out, a quiet wave of technically minded people started positioning themselves ahead of the crowd. Fast forward to today. Silver prices have jumped over 30% in the last 6 months. Some of the mining stocks these early movers bought, they're up 70, 80, even 100%. And this is just the beginning, because the real surge hasn't even started yet. The mainstream investor still doesn't get it. The headlines are still about Bitcoin and Nvidia. Nobody's connecting the dots. But inside the AI labs, inside the semiconductor fabs, inside the companies that are actually building the infrastructure of the future, there's a scramble. Procurement officers are locking in supply contracts at any price. CEOs are calling miners directly. There's talk of strategic reserves. And the geeks who saw this coming? They were sitting on positions that are going to 10x when the rest of the world wakes up. Not because they're lucky, not because they're insider trading, but because they understood the physics before the market did. They didn't need CNBC to tell them. They just looked at the numbers and followed the logic. And that's what you're about to do right now. Let me walk you through exactly how this works, step by step, so you understand why this isn't hype. Every AI model you interact with runs on chips. Those chips are made in semiconductor fabs. The fabrication process uses silver paste, silver alloys, and silver coatings to create the conductive pathways that allow electrons to move at the speeds required for processing. Without silver, the chip doesn't work. It's not optional. It's not negotiable. Now, as AI models get bigger, they need more chips. More chips mean more silver per data center. More data centers mean more total silver consumed per year. And unlike oil or wheat, you can't just plant more silver or drill another well. Silver deposits are finite. New mines take 7 to 10 years to develop, and even then, most new projects are small. The big deposits have already been found. They've already been mined. We are now in the phase where every ounce of new supply is harder and more expensive to extract than the last. At the same time, silver inventory levels are dropping. The COMEX warehouses, which are the main hub for silver trading in the United States, have seen their stockpiles cut in half over the last 3 years. The Shanghai Gold Exchange, same story. The physical metal is being drained from the system faster than it's being replaced. And this creates a lag. For a while, the price stays stable because the market is slow to react. But once the inventory hits a critical threshold, the price doesn't rise gradually, it spikes violently. We've seen this before with other commodities. Palladium did it in 2020, lithium did it in 2021, uranium is doing it right now, and silver is next. The difference is that silver is bigger, it's more essential, and the industries depending on it have trillions of dollars in market cap. They will pay whatever it takes to keep their supply lines open. And when they start bidding against each other, the price discovery process is going to be brutal. That's the mechanism. That's the trap the market is walking into. And the investors who understand this, whether they're geeks, retirees, or just people who paid attention, they are going to be on the right side of the biggest commodity repricing event of the decade. Now, I know what you're probably feeling right now. You're thinking, why didn't I hear about this sooner? Why isn't this on the news? Why does it feel like I'm always the last to know? And that's a valid feeling. It's not your fault. The financial media doesn't cover supply chain mechanics. They cover price action, drama, and whatever's trending on social media. They don't send reporters into mining conferences or semiconductor fabs. They don't read engineering white papers. So the stories that matter most, the ones that actually move markets over the long term, they fly under the radar until it's too late. And by the time CNBC runs a segment on the silver shortage, the easy money will already be made. The geeks didn't have insider information. They just had curiosity and access to public data. They asked questions, they connected dots, and they acted. You can do the same thing. You're not too late. The big move hasn't happened yet. Silver is still under $35 an ounce. Most mining stocks are still cheap. The institutional money hasn't flooded in. You're actually early compared to 99% of people. But that window is closing. Every week, more people figure this out. Every month, more supply disappears. And once the narrative shifts, once the financial media catches on, the opportunity will compress into a matter of days. So if you're feeling behind, don't. You're exactly where you need to be, right now. Watching this, listening, thinking. The only question is whether you're going to act. Here's the shift I want you to make in how you think about investing. Most people chase what's already popular. They buy stocks that are already up 50%. They follow trends after they've been validated by everyone else. And that's fine if you want average returns. But if you want to build real wealth, you have to look at the system, not the sentiment. You have to understand what the world will need before the world realizes it needs it. Right now, everyone's investing in AI companies, NVIDIA, Microsoft, Google, OpenAI. And yes, those are great businesses, but they're expensive, they're crowded, and they're dependent on a resource that almost nobody's paying attention to. Silver is the unglamorous linchpin. It's the thing that makes everything else possible. And that ain't why the smart money isn't TT chasing the AI stocks anymore. They like rebuying the input. They're buying the commodity that every AI company has to have but can't control. It's like investing in oil in 1995 when everyone was buying .com stocks, or investing in lithium in 2015 when everyone was buying Tesla. The supply is the choke point. The supply is where the leverage is. And silver is the highest leverage play in the entire AI supply chain. So stop thinking like a trend follower. Start thinking like an engineer. Look at what has to happen for the future to work. Look at the constraints. Look at the bottlenecks. And position yourself there. That's the insight. That's the edge. Not tips, not hype, not luck. Just logic, just physics. Just supply and demand doing what they've always done. And once you see it that way, the decision becomes obvious. So here's what you do next. You don't need to become a commodity trader. You don't need to open a brokerage account in Singapore or buy a vault in Switzerland. You just need to educate yourself and take one small informed step. Start by learning the basics. Understand the difference between physical silver and paper silver. Look at a few mining companies. Read their production reports. Check their balance sheets. See which ones are profitable, which ones are expanding, and which ones are sitting on large, undeveloped deposits. If you want to own physical metal, you can. It's legal, it's simple, and it's one of the oldest forms of wealth preservation in human history. If you prefer stocks, there are ETFs and mining equities that give you exposure without the logistics. The point is to act, not recklessly, not emotionally, but deliberately. Because the geeks who are already rich didn't wait for permission. They didn't wait for confirmation. They saw the data, trusted the logic, and moved. You have the same information now, the same opportunity. The only difference is time. And time is the one thing you can't get back. The AI revolution is real, but it's not powered by code alone. It's powered by atoms, by metal, by silver, and the people who understand that will be the ones who profit from it. Not the loudest voices, not the flashiest portfolios, just the ones who paid attention when it mattered. You're paying attention now, don't waste it. The shortage is real, the opportunity is real, and the clock is ticking.